students, welcome to Sunil's tutorial. I'm Sunil Mirwani and today we'll be doing this chapter called as amalgamation. We are going to do question number 19 today. I'm going to do question number 19 in the books of A and B. Now, they said that A Limited absorbed B Limited with effect from 1st April when the balance sheet is as follows, right? A Limited is buying B Limited. A Limited buys B Limited. Right? Next. The terms of absorption were as follows. A Limited will issue 8 equity shares for every 5 equity shares in B Limited of rupees 10 each at 11 per share. Calculation of PC. For equity shareholders, right? A and B, right? A Limited will issue 8 equity shares for every 5 shares in B Limited. Now B Limited has got how many shares? B Limited has got 4 lakh shares of rupees 10 each, so that is 40,000 shares. So in that case, someone please calculate how many shares this will be. 64,000. So 64,000 shares are going to be issued. 64,000 shares of 10 each at 11 per share. So 64,000 equity shares of A Limited at the rate of 11 per share. Someone please calculate 64,000 into 11. Someone 7 lakh 4,000. Next, this is what the equity shareholders are going to get. Next, 11% preference shareholders of B Limited will be issued equal number of preference shares in A Limited of rupees 100 each at 105 per share. For preference shareholders, they would be issued equal number. Now at the moment, there are 4,000, so they will get 4,000. 11% preference shares of A Limited at 105. Someone please calculate this. This is 4 lakh 20,000. Someone cross check that, guys, please. 4,000 into 105. So in that case, they said that A Limited agreed to take over debentures. That's we see that, sir. Debentures of B Limited at book value subsequent after absorption. 10% debenture holders of B Limited are to be discharged by A Limited by issuing such number of 15% debentures so as to maintain the same amount of interest. Cost of absorption paid by A Limited. Creditors of B Limited include 10,000 payable to A Limited. It was decided to write off goodwill and capital reserve mutually. So my total PC is going to be 7 and 4, 11 lakh 24,000. Right? Once you've done this, let's start first in the books of B Limited. Seller, journal, standard format. First, transfer assets, realization account debit to all the assets. All the assets are going to be taken from the balance sheet. That is going to be land and building, to plant and machinery, to stock, to debtors, to bills receivable, to bank. Right? Here, land and building. Land and building is 4 lakh 40,000. Plant and machinery is 8 lakh 40,000. Stock is, no, this is of A Limited. We are doing in the books of B Limited. B Limited land and building is 2 lakh 80,000. 2 lakh 80,000. Plant and machinery is 5 lakh 20,000. Stock is 3 lakh 20,000. Debtors is 2,80,000. Bills receivable is 1,80,000. And bank is 20,000.
16 lakhs.
Right? The total amount is 16 lakhs. Being assets transferred. Right? Once you transfer the assets, the next thing that you need to do is transfer the liabilities. Right? Let's transfer liabilities, guys. You need to transfer liabilities. So now amongst the liabilities, the ones that you have is 15% debenture account debit. % debentures account debit. They don't have B limited. They have only 10% debentures. 10% debentures account debit. Sundry creditors account debit. To realization. Right? 10% debentures is 2,40,000. Right? Sundry creditors is 4 lakhs. So this is 6,40,000. Being liability is taken over. Next, transfer the preference shares. You have 11% preference share capital account debit. To preference shareholders. Right? Preference share capital is given to you as 4 lakhs. Preference shareholders from our PC, we know we pay them 4,20,000. The difference is going to be realization. Debit 20,000 being preference shares transferred. Next, once you transfer the preference shares, then you need to transfer the equity shares. So you will have equity share capital account debit. Equity share capital account debit. Then you have general reserve account debit. Export profit reserve account debit. Reserve account debit. Statutory reserve account debit. To equity shareholders. Right? Equity share capital is 4 lakhs. Then you have general reserve is 1 lakh. Export profit reserve is 40,000. Other statutory reserve is 20,000. 5,60,000. Being equity shares transferred to equity shareholders. Right? Once you finish transferring the equity shares, the next thing that you need to do is record the PC. Next thing you need to do is record PC. The new company is A Limited. A Limited account debit to realization. PC amount is 11,24,000. 11,24,000. Being PC recorded. Once you record the PC, next thing you are supposed to receive the PC. equity shares of A Limited debit, 11% preference shares of A Limited debit to A Limited. Equity shares is 7,04,000. Preference shares is 4,20,000. Total is 11,24,000. Being PC received. Once you receive the PC, pay the preference shareholders. Debit the receiver. Preference shareholders account debit. To 11% preference shares of A Limited. Right? You're going to be paying them 4,20,000. 4,20,000. Being preference shareholders paid. Right? Next, you need to make realization account. You need to calculate the profit. Someone please help me do this. Someone please help me calculate the profit.
1,44,000.
You have a profit or loss in this?
Profit.
Profit. You have profit. So this is going to be realization account debit to equity shareholders 1,44,000. 1,44,000 being profit transferred. Once you finish transferring the profit, then you pay the equity shareholders, debit the receiver. Equity shareholders account debit to equity shares of A Limited. You will be paying them with shares of 7,04,000. The equity shareholders paid. Right? Okay. So this finishes in the books of B. Now let's get to in the books of A. First, you need to acquire the business. So this is going to be business purchase account debit. To liquidators of B Limited. Right? Amount is 11,24,000. Right? Being business acquired. Right? Once you acquire the business, now take over assets and liabilities. You have to take over assets and liabilities. So this is going to be land and building account debit. And then plant and machinery debit. Stock debit. Debtors debit. Bills receivable debit. Bank debit. Leave a line to 10% debentures of B Limited to creditors to business purchase. Right? Now let's see this land and building. They are saying that land and building is to be taken over at 3 lakhs. Land and building is to be taken over at 3 lakhs. Next, plant and machinery is to be taken over at 5 lakhs. Stock is to be taken over at 3 lakhs. Debtors is to be taken over at 2,60,000. Bills receivable at 160. Creditors at 3,80,000. Right? Bank at the same value, that is 20,000. Now, debentures. Regarding debentures, they said that A Limited agreed to take over the debentures of B Limited at book value. That means debentures have been taken over at book value, which is 2,40,000. And business purchase is 11,24,000. Right? Someone get me the difference, please. The difference, I presume, is going to be on the debit side in this case.
2,04,000.
How much?
2,04,000.
2,04,000. The difference will be called as goodwill. Being assets and liabilities taken over. Right? Once you've done that, then you have to pay. Debit the receiver, liquidators of B Limited, debit. You are going to be paying them equity share capital. You are also going to pay them preference 11% preference share capital to security premium. Right? Liquidators is 11,24,000. Right? Equity share capital. Now I'm supposed to issue 64,000 shares at the rate of 10 each. So that is going to be 6,40,000 face value. I'm supposed to issue 4,000 shares at 100 each. That is 4 lakhs. The difference is going to be security premium 10,40,000. 84,000. Someone cross check please. Mean PC paid. Right? Next. Now let's see. They are saying that subsequent to the absorption, 10% debenture holders of B Limited are to be discharged by A Limited by such number of 15% debentures at 100 so as to maintain the same amount of interest. Working note. Interest on 10% debentures. These are 10% debentures. Value of the debenture was 2,40,000. 24,000. Right? Now I want that same interest on my 15% debenture also. What should be the value of debenture that should be issued? So interest on 15% debenture is supposed to be same as interest on 10% debentures. Interest on 15% debentures will be 15 upon 100 into X. Has to be 24,000. Someone please help me get the value of X. 24,000 into 100. 15. 1 lakh? So that means I have to issue debentures of 1,60,000. Fine. Let's issue those debentures, exchange in fact. Not more than issue, I have to exchange the debentures. So, debit what comes in? The 10% debentures of B Limited will come in. 10% debentures of B Limited debit. Instead of that, I will be issuing 15% debentures. %10 debentures were 2,40,000 and I'll be issuing debentures of 1,60,000. Right? The difference is going to be on credit side. Since the difference is on credit side, it will be called as capital reserve. This is going to be 80,000 being debentures exchanged. Right? Okay, once you have exchanged the debentures, the next thing that they've said is the cost of absorption 10,000 was paid by A Limited. Paid. Money is going out. Bank will come on the credit side. You don't have cost of absorption anywhere. Since the difference would be on debit side, that will be called as goodwill. So goodwill account debit to bank. Amount is 10,000 being cost of absorption paid. Next, they also said that creditors of B Limited include 10,000 payable to A Limited. If they are creditors of B Limited, that means those will be debtors of A Limited, right? I was supposed to receive money from B Limited. Now since I have purchased B Limited, I will not get that money. That means my assets are going to go down. Debtors say I'm not going to get that money, so that money is going to, since it's not going to come, the value of my debtors will go down. Asset going down, that means debtors should come on the credit side. So this will be sundry creditors account debit. Sundry creditors account debit to sundry debtors. Amount is going to be 10,000. Being intercompany account settled. Next, once you finish settling the intercompany accounts, next last thing that they said is it was decided by directors of A to set off goodwill and capital reserve mutually. Now goodwill I've got 2,04,000. Capital reserve is 80,000 and goodwill is 10,000. So 2,14,000 minus 80,000. Someone tell me how much is that going to be? Capital reserve account debit to goodwill. I'm going to write off that 80,000. 80,000 that I have sufficient amount of my goodwill to write off the entire capital reserve. Right? So being capital reserve set off. Right? Now, besides that, I presume you have export profit reserves. Now, export profit reserves are supposed to be statutory reserve. You also have other statutory reserve. Statutory reserves have to be maintained for 3 years. So you will have to create that account. Amalgamation. Adjustment account debit to the reserves that you have are export profit reserves. To statutory reserve. Right? Export profit reserve is 40,000. Statutory reserves are 20,000. So total is 60,000 being reserve created. Right? Anything else remaining? I think I've covered everything. Let's make balance sheet of A Limited. Liabilities, rupees, assets, rupees, authorized share capital. Authorized share capital. Now let's see this. They haven't given you, so we leave that there as it is. Then you have issued and subscribed capital. Under issued and subscribed capital, you are going to have first equity share capital. Your equity share capital was already 10 lakhs. Besides that, you issued another equity share capital of 6 lakh 40,000. So that will give you 16 lakh 40,000. Then you will have 11% preference share capital. Now 11% preference share capital, you had 4 lakhs. Besides that, you have issued another 4 lakhs. So that gives you 8 lakhs. Right? Next, let's move on to reserve and surplus. Reserves and surplus. Under reserves and surplus, you have revaluation reserve. Revaluation reserve is 40,000. Besides that, you have general reserve 3 lakhs. You also have general reserve 3 lakhs. Then you have export profit reserve. Export profit reserve was 80,000 plus another 40,000. 80 and 40, 1 lakh 20,000. Then you have other statutory reserve. Other statutory reserve is 1 lakh plus another 20,000. So 1 lakh 20,000. Then you have security premium. Security premium was 84,000. So those were all your reserves. Then secured loans. Under secured loans, you have 15% debentures. 15% debentures were of 1,60,000 and you issued another 1,60,000. So 3,20,000. Right? You had taken over 10% debentures, but they've been converted into 15% debentures, so this will be nil. Next, unsecured loans. Not given. Current liabilities. Under current liabilities, you have sundry creditors. Creditors were 3,20,000 and you've taken over creditors of 3,80,000. 320 plus 380. 7. Right, let's move on to the asset side. Fixed assets. Right? You will have goodwill first. Right? In goodwill, we had already calculated this 2,04,000. 2,04,000 plus 10,000 minus 80,000. Someone give me that? Then you have land and building. Land and building is 3 lakhs. Then you have plant and machinery. Plant and machinery is 5 lakhs. Right? Then you have investments. No. Land and building is 3 lakhs that I've taken over. And I have another 4,40,000 of my own. 4,40,000 plus 3, 7,40,000. Plant and machinery I have taken over of 5 lakhs. And I have 8,40,000 of my own. 8,40,000 plus 5 lakh, 13,40,000. Investments. Under investments, you don't have any investments. Then you have current assets. Under current assets, you have stock. You had stock of 5,80,000 and you've taken another 3 lakhs, so that makes it 8,80,000. Then you have debtors. You had debtors of 2,40,000 and you took over another 2,60,000, right? 5 lakhs. Then after debtors you have bills receivable. You had bills receivable of 2,60,000 and you have taken over bills receivable of 1,60,000. 2,20,000. Bank. Right? Bank you had 40, you took over another 20. Did you pay anything to anybody? No. 60,000. Then you have amalgamation adjustment. Amalgamation adjustment is 60,000 again. Right? So I presume we've passed all the entries. Have we paid in? Yes, we paid bank 10,000 we paid. So this won't be 60 but this will be 15,000. Right? Capital reserve we've already written off. Right? Someone please check whether the balance sheet tallies.
41,24,000.
41,24,000. 41,24,000. That finishes that sum. We'll stop this here for the day. Thank you very much.